It's fantastic that central bank buying, and I think other whales, other deep-pocketed investors have moved into gold.
This is Kaiser Johnson, and these are the Miles Franklin Weekly Specials for September 9th through September 16th, 2024, while supplies last. First, we have a very limited supply of backdated silver Australian Kookaburra 10-ounce coins at just $3.10 over spot per ounce. Next, 1-ounce backdated platinum maple leaves are just $80 over spot. And finally, we have compelling pricing on various pre-33 American gold coins. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Lobo Tiggre, the Independent Speculator, independentspeculator.com. Lobo, thank you so much for joining us today.
Happy to, Elijah. I love talking about liberty and finance.
Fantastic. Well, we'd like to talk about those today. I think one of the things that has been really on people's mind recently as we look into the end of the year is a recession. Now, you've been calling for a recession for quite a while, and it seems like that's been what has been on the horizon for quite a while, but it seems like things are coming to a head. We had some troubling jobs data. We're having CPI data come out tomorrow. Your perspective on where we are in the economy for the U.S.?
Sure. Well, first and foremost, I need to remind the audience that I'm a due diligence guy. You know, I get paid by people who trust me to kick rocks and help them pick stocks. But the world of economics is so muddled, and the models out there that the mainstream uses are so broken. The wrong way Corrigan's out there make any sensible investor have to go and think and become something of an amateur economist himself. So I'm not afraid to go there, but I do like to put that caveat out there. You know, I'm not a PhD in economics. Maybe that's a good thing. So caveat aside, as we're recording now, it's CPI Day Eve. I don't know when this will go live, but this is all much on our minds. And a couple very simple points. One is the famously long and variable lags. The average length of those in the U.S. between the initiation of a rate tightening cycle and a recession is around 27 months. So the average length, you know, there are a lot of people, you know, as you've said, I've been in the hard landing camp for a while. A lot of people saying, oh, well, it hasn't shown up by now. Lobo, you and your tinfoil hat crowd can just go and pound the sand. If it hadn't happened yet, it's not going to happen, blah, blah, blah. But those were all very ignorant statements. I mean, okay, I thought, given how much the Fed tightened so quickly, honestly, I thought that there would have been fireworks before now. Then I was wrong. I'll admit that. But back to my point, the average delay of these long and the variable lags is 27 months, which would have come due last July. And lo and behold, I'm not saying that, you know, that proves anything, but lo and behold, in July is when we started to see the cracks appear in the labor market. And what we've got now, this is important, Elijah. This isn't just, oh, cracks are appearing. They started almost right on schedule in July, and they widened, and they're widening more now. This is not just a data point. It's not something to be dismissed. It's now a trend. And if you look at, whether you look at a SOM rule chart or, you know, my favorite, the Gunlock indicator, the long-term sort of 3-year average unemployment versus spot unemployment, if you will, when these charts, when unemployment curves up, that's the recession indicator. And by the way, both SOM and Gunlock indicators are coincident, not leading indicators. They're telling us that we're in recession now, even if the powers that be won't recognize it until next year or whenever, if ever. But you know, these rules have a very strong track record. The Gunlock one goes back 80 years. There's an unbroken, successful track record of nailing coincident recessions before the powers that be admit it. So, and people say, oh, well, how can that be? We've got such a great economy. Not really. If you have the rose-colored glasses that Janet Yellen seems to only ever wear, and it's funny, if you wear red, then how do you see red lights flashing? She said just yesterday, as you and I speak, that she sees no red lights flashing. Well, I mean, when unemployment starts going like this, it's silly, not just, okay, it's stupid to say that, oh, it's still low. Yeah, but the point is, where's it going? It's going steeply up. It's accelerating upwards. That is bad. The fact that it's still low, but it's going up, you know, the trend matters. Plus, these indicators that we're talking about, when it does this thing, when it starts pulling a hockey stick, it never just stops and goes right back down again. It doesn't happen. It's not in the data. Deteriorating conditions tend to exacerbate, tend to become a vicious cycle. So there's a lot of different ways I can go with this, Elijah. But basically what I'm saying is, for all those people that were dismissing me and saying, Lobo, you're just a perma-bear, you're just so negative, you only look at the negative. Well, I think the mainstream cheerleaders are too positive. So I see it as partly my job to balance that with some of the negative that they just don't see with their rose-colored glasses. And now I think the totality of the data, to use Powell's phrase, is starting to be pretty obviously on my side. And it's not just the labor market. That's the pillar of American exceptionalism. So it's very important to see the labor market caving. But it's also been a manufacturing recession. The U.S. has been in manufacturing recession for a long time, not just 2 quarters, right? But a long time. And we've had this trucking recession. Commodities are telling you, that's a massively flashing red light. Dr. Copper, with the PhD in economics, is way down. This is all telling you. There's a lot more I could go into, but I think any reasonable person who tries to look at what's really going on has to see the red lights out there flashing, and they should invest accordingly.
Now, you've mentioned how, the mainstream right now is looking for a Fed rate hike in September, but there could actually be a bigger pivot coming soon from the Fed, where we're actually seeing aggressive easing cycle. Why do you think that is going to be the case, and what do you think that could mean for the monetary metals?
To be fair again, or try to be as honest as I can, my thesis here for a long time that you and I have spoken about was that the Fed was going to break something. So if you go by the mainstream economic perspective, yes, the Fed should be cutting, arguably should have cut already. If what I'm saying about the SOM roll and the gun luck indicator, if all that's right, they should have been cutting already. Trends don't just stop on a dime, not just this unemployment uptick that I'm talking about, but let's say inflation. If the economy is cooling and that's bringing inflation down, you can't just say, oh, we're at 2%, we'll stop now, and that's fine, right? Whatever you did that made the bow of the ship swing ever so slowly in the direction you want, it doesn't just stop right there. So there is good reason, again, according to the mainstream outlook, to ease up on the brakes before you get to the goal. And arguably they should have already. But my thesis was that something would break, and that hasn't played out yet, or part of my thesis. The other part of the thesis, though, is that regardless, rate cuts are good for gold and silver, monetary metals. So I'm, whether I was right or wrong about the hard landing or the reasons why, when the rate tightening cycle turned into a rate cutting cycle, that was going to be bullish. Now, I thought that might happen actually around now, but earlier when I was forecasting for 2024, and I said, this will be the year for gold. Last year it was uranium. This year it was gold. I didn't think it would happen until about now. But I thought that's when things would start breaking more. That hasn't happened. So what that means, though, is it's interesting because the other reason of rate cuts, recession becoming more undeniable, that's coming into play. But we're not at 1900 or 2000 gold when I made that call. We're now going into that at 2500. So the reasons to be bullish on gold are still ahead of us. And by the way, the Fed breaking something, it hadn't happened yet, but that doesn't mean it's not going to. So the way I see it is rate cuts alone are good for gold. Undeniable recession, that'll be good for gold. We may or may not get that undeniable recession. I think we will. I think it's starting to happen now. But even if we don't, the rate cuts are good for gold. So that's the minimum. But on top of that, if recession becomes undeniable, I think that's very good for gold and silver. And then if I'm right about that breaking things, like the other shoe finally dropping on commercial real estate or some of these other things, banks marking things to market that they've been able to get away with not marking to market. If we have a reality check, we could still see the Fed break something. But even if not, the base case is still bullish for gold starting from 2,500. So, I'm not one for wild arm waving, but I am very bullish for gold. It is a very high confidence trade for me. Now, of course, gold bullion is not a speculation. It's not even an investment. It's savings, it's insurance, it's real money, and it's how I save money for the future. I'm not talking about that. I always am in the market for bullion whenever I have extra money that I want to put away for the long term. I'm talking about speculating on gold stocks. And so for that, trying to project where the market is going is very important. And I just see it as either bullish, very bullish, or super bullish as being the options. And it's very rare that you get an opportunity like that. Can I be wrong? Yes. But I'll tell you what, I'm putting my own money where my keyboard is on this.
I think it's really important to note that you mentioned last year, at the beginning of last year, that 2023 was going to be the year for uranium, right? That was your top play. This year, you said gold, and already we've seen a huge run in gold, but the factors that you were looking to move the gold price higher really haven't played out completely yet. So all those factors have yet to come.
Right. So if I'm right about that, then that's more upside on top of where we've come. And, it's fantastic that central bank buying, and I think other whales, other deep-pocketed investors have moved into gold. I think I may have said this, I don't know if I've said this on your show or not, but my explanation for why gold has gone up before these other factors came into play is that I think people are starting to read the tea leaves, and not just gold bugs, but like more deep-pocketed institutional and family offices, even sovereigns around the world. And I don't just mean central banks, I mean funds. They're stocking up on gold. We've got two hot wars, either one of which could become World War III, and the global financial order is in disarray. The American exceptionalism makes it seem like we'll take more proof before recession becomes undeniable. But China's in trouble, Europe's in trouble. With those two big markets in trouble, the rest of the world feels, they're looking at risks. And so, Rick Roll's famous thing about global average over the decades as being like 2% allocation to gold, and it's only 0.5% now. I think that's what we're starting to correct. I think more people are starting to say, they're not becoming gold bugs. They're just saying, you know what, I have no gold in my portfolio. Would it hurt to buy a little as insurance? So I can't prove that. This is my theory for what happened earlier this year, why gold went up without really the economic drivers to make it go up. But now those economic drivers are coming into play. So I do think we go up from here. Yes, that's a forward-looking statement. Yes, I can be wrong, but that is what I think, and that is how I'm speculating with my own money.
Now, what about the gold stocks as well? It seems like we've seen a bit of a lag on their part, not really catching up with gold for the most part. Yeah.
Well, first and foremost, I think it's a mistake to just look at the indices. And sorry, but it's a stock picker's market. And, I have done better than the indices this year. The gold stocks, even with the indices, they have responded to gold. They haven't delivered the kind of leverage we'd like to see so far. There's a free article on my website called Are Gold Stocks a Broken Asset? Or Are Gold Stocks Broken? Or something like that. It's a free article you can search for on the website. But I make the point that, and this is also a Rick Roll thing, in some ways the industry deserved the discount. They failed so spectacularly to deliver for shareholders in the early aughts, right? The ramp up from 258 to 1911 gold, from 2001 to 2011, right? They failed so spectacularly to succeed in the actual business of mining gold and making money for shareholders that it's not unreasonable for investors to look at them with skepticism now. And so that's another interesting thing, and I think a particular source of opportunity, because the stocks and the companies facing the skepticism, they have not really moved as much as we would think, expect, or hope as speculators. But I think they will. In Q1, we had the biggest gold producers in the world. They all beat expectations. We're into Q2 now, and we're starting to see good results too. So I think we're getting to the point where even the Warren Buffetts of the world could look at the gold mining business and say, I get it. That makes sense. They have these producing assets, the margins are increasing, and there's a huge moat. It takes years and years and years to explore, permit, build another gold mine. So it fits, in my view, that Warren Buffett-y sense of looking for a great business that competition can't just jump in and swamp them out. And in a context where if I'm right about gold itself going up, then that moat is highly relevant. Your competition, let's say even if you have a mothballed gold mine, you're an existing miner, you've got the know-how, you've got people on staff, and you can go back into production lickety-split. Well, in the mining world, lickety-split means like 6 months or a year. So, that moat is tremendous for the people that have the goods now, the profitable miners. So I think we're in a situation where we may see that skepticism about the gold miners and the gold stocks fall away. And if nothing else, just, we're at nominal all-time highs now. You start going way above that. I mean, a mere 20% rise from where we are now takes us almost to $3,000 an ounce. That would have screaming headlines left and right. That would have generalist investors saying, how can I jump in? Even young people, Elijah. I don't know if your friends have talked to you about it since you do this sort of thing, but I teach economics and entrepreneurship, and young people are interested in gold. They're not religious about cryptos or this, that, or the other. They're just looking for things that will work. And headlines about all-time highs in gold have them asking me questions that they never asked before. Suddenly they want to know about gold. So now imagine that going forward if I'm right about the other things that I've said. So I think it's actually, I know that it's going out on a limb. Yes, it's speculation. My publication is not the independent sure thing can't lose ever.com, right? It's the independentspeculator.com. I think it's a fantastic speculation. When the underlying asset is already showing huge strength and the securities are still lagging behind, that gives you a chance to buy. You're not buying high and hoping to sell higher. You still have a buy low opportunity.
Now, I know you've focused a lot on gold in particular, and in the past have said that silver has been acting more as an industrial metal. Do you have any updates on that? And are you bullish on silver at all at this point?
Yes, I am bullish on silver. My thesis that got me called Darth Silver was never a bear case for silver. It was a future-looking case about whether or not silver will actually ever go back into circulation as money, since digital receipts solve the problem of making change for gold. I'm not sure that it will, but set that aside. We can let history decide that. Silver has been acting more like an industrial metal. Clearly, its industrial use case has changed and it really exploded. I actually see this as a good thing. That hasn't made it stop being a monetary metal or a safe haven asset. It still works that way, but it also has this other possibility. I think on the other side of the recession, once we're sure that any potential downside due to the industrial side is off, I see silver as the win-win metal. I think both the monetary and industrial aspects in an inflationary environment where the powers that be are blasting with the money bazookas left and right, I think silver does really well. Oh, and by the way, it's an essential part of the green agenda too. So whether you like that or not, it's happening, right? And it's another tailwind that really doesn't affect gold, but is a tailwind for silver, big time. All of that said, last year silver did correlate more closely with copper than gold. That's just a mathematical fact. You can do the numbers and look it up. The good news is that silver has been tracking gold more again this year, particularly on, it's interesting to me, on like geopolitical events where fear makes people go into the dollar and gold at the same time. Silver tracks gold then. So the world is still treating silver as money, which is good. But it has been underperforming, right? We keep getting nominal all-time highs in gold, but we haven't had a new nominal all-time high in silver yet. I was just talking with David Lynn, and he showed me a chart where it looked like silver was correlating more with gold than I had thought this year. But in the last couple of months, the alligator jaws have opened. So no matter how you look at it, there is data out there that tells us that silver is behaving differently than past cycles. And its industrial side is changing its trajectory. So in that context, it makes me a bit nervous. I still like it. I'm still bullish. I'm still willing to buy a great silver stock if I can find one. And that's the hard part, the finding a great one. But I have to say I'm more confident in gold. I see it as less risky in front of the recession. After the recession, I expect to have a greater emphasis on finding more silver stocks in my portfolio than gold. But right now, in front of the recession, I'm trying harder to get more gold in there than silver.
One thing I did want to touch on as well is uranium, because it seems like obviously we have seen quite a run in uranium already. Looking to the end of the year, do you anticipate more upside potential? And what is your perspective? I know when it comes to you had an article written by Kyle Johnson on your website, Independent Speculator.
No relation.
No relation to us here, but. He was talking about how one of the ways to power this new AI revolution is to create more nuclear power plants. Your perspective on that?
All right, there's several threads there. One is, I had initially somewhat discounted the AI craze. You have these things, the dot-com boom and these crazes the market goes into. They always seem to fizzle, and then you figure out who the winners are, and a decade later, like, it becomes a real business and money's being made based on these things that had been a flavor of the day before. This worries me about this. But the data center build-outs is real. Like, that's happening now. And the energy demands that those things require is real. That's happening now. And this is a use where, it's not optional. Like, you can't just operate these things at half power or something. You can't have a brownout rolling through your data center. And you can't just turn them off at night or something, right? At night for you here is daytime across the world. So these things need reliable 24/7, 365 power, which doesn't come from windmills or solar panels. Nuclear is ideally suited for this. But you know what? Even if none of that pans out, I do think that that's a real case. That's a tailwind, a new tailwind. It's not in any of the existing uranium supply and demand models, and I think it's extremely bullish. But let's say it's all a load of dingoes' kidneys. Tomorrow, Intel invents a super energy efficient AI chip that just puts NVIDIA out of business or something. Who knows? Like, let's say it all changes direction. We're still building nuclear power plants, as fast as we possibly can. Just recently, China, which is already building scores of them, announced 21 new reactors. This isn't just an idea or this is we're building these more. So it's just boom. The demand side, I sincerely think it would take a Chernobyl scale event to derail the demand side. Meanwhile, the supply side is still taking time to sort itself out. Yes, high prices cure high prices. Yes, that's happening now, this year, right now, as you and I speak. Existing producers are ramping up production. Mothballed production is coming back online. Low-hanging fruit of high-margin projects are being built. This is all happening right now. But it's not enough. Even if it was all done completely according to plan and on schedule, on budget, and all that stuff, it would not be enough to meet the demand. And it's not going well. I mean, mining is a crappy business, really. Doug Casey famously calls it a crappy 18th century choo-choo train industry, right? It's so difficult. Even when things go well, it just means relatively well, right? So, the best and most experienced uranium miners in the world are having trouble bringing their assets online. We'll see if our friends up in Canada manage to do it on time and budget. We'll find out very soon. But everybody else is experiencing delays. The biggest and the best in the world experiencing delays. So I just don't see, I do see the demand side just going nuts. I don't see the supply side being able to meet that demand. It's close to balance this year, maybe, but they're failing to deliver. So maybe not, right? But there is no scenario where it just swamps demand. So I'm extremely bullish. The fact is, you said uranium's had a good run, but it has corrected. And by the way, I said uranium was my highest conviction trade for 2023 and 2022. This year I switched to gold, and uranium bulls didn't like that. And I said, well, gee, it's gone up over $100. That's higher than the incentive price we were looking for. And it's gone vertical. It's reasonable to expect a correction. Boy, did people not want to hear that. But I was right. So for what it's worth, I'm not always right. But, I have been right about the uranium market. I was right to call the correction. And right now, I'm saying that I see uranium as a buy. I don't know where the bottom is. It might be in. We have reached a point where the spot price has basically bumped against the long-term contract price which seems to be providing reasonable support now. Never say never, but actually I don't expect much more downside from here. But the sentiment in the space has gotten not quite as bad as in 2022, but it's close. There's a lot of angry people out there that, bought it when it was up $100 and they're in the red and they're mad. And I understand that. But their feelings and their result doesn't change all these fundamentals that I've just spoken about. So love me, hate me, agree with me, disagree with me or not. But that's how I see it. I think that the negative sentiment and the broader market volatility has put uranium stocks on sale. And that is a fantastic opportunity for anybody that missed the double in uranium in 2023. Will it double again? It may or may not. It doesn't need to. We're plus or minus $80 a pound right now. That's plenty for the uranium miners, or at least the ones that have good projects, to make money. So uranium doesn't actually need to go anywhere. It just needs to not melt down. Forgive me for the pun. And the miners will make money. But markets being the way they are, I do think it'll go higher. And I expect some irrational exuberance in this sector that will benefit people that have the courage. And I understand it's a speculation, it'll take courage. But to buy, as Rick Rule says, what everybody else is hating. Hate is good if you're in that contrarian mindset.
Fantastic. Well, Lobo Tiggre, really appreciate your time today. IndependentSpeculator.com is the website if people want to go sign up or check out even the free articles there. Can you tell us a bit about that?
Sure. Well, you've just said it. So I'll just say, if you sign up for the weekly newsletter, it's free, and we do not spam you with advertisements every day. I hate that kind of promotion. You get one email per week. You can see how I think, what I'm doing, and decide whether or not, my services might benefit you as your due diligence guy.
Fantastic. Lobo, once again, thank you so much for your time, and God bless.
Thank you, Elijah.
This is Kaiser Johnson, and these are the Miles Franklin Weekly Specials for September 9th through September 16th, 2024, while supplies last. First, we have a very limited supply of backdated silver Australian Kookaburra 10-ounce coins at just $3.10 over spot per ounce. Next, 1-ounce backdated platinum maple leaves are just $80 over spot. And finally, we have compelling pricing on various pre-33 American gold coins. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.